Welcome to Resource PNG. Over the last decade, Papua New Guinea has been fortunate to have built its reputation as a liquefied natural gas producer. With the introduction of internationally recognized firms who have since set up operations in the country, LNG is now big business. The Elk-Antelope project is one project that has been touted as the next big LNG development for Papua New Guinea. This resource, located within the PRL-15 area, has been the subject of much debate, particularly within the last year. In this episode of Resource PNG, we speak with Isikeli Taureka, Executive Vice President of InterOil Corporation. InterOil is involved in the development of the Elk-Antelope Gas project. This project has been touted as the next big development of gas in PNG. Whilst it has not been smooth sailing, InterOil is confident that this project can successfully get off the ground.
It's important, I think, to mention that the government was quite clear that they wanted another super major in Papua New Guinea. So with that mandate, we talked to a few, and at the end of the day, Total put the best proposal in to farm in or buy into the PRL-15 project. So that's quite exciting to have a company such as Total being the operator. InterOil will continue to focus on exploration. We are now in the process of a transition after a successful outcome for InterOil and Total in the arbitration with Oil Search over the preemptive rights that Oil Search felt they had. That has been settled, and we are all moving together, Oil Search, Total and InterOil, to make this project happen. I might add that during the arbitration process there was work still going on, so it was not as if anything was stalled. But certainly there's a lot of work being done, a lot of technical studies that were occurring, led by Total out of their head office in Paris. And so things are moving along. Where in this year, the real milestones that we have to achieve is doing an extended well test on Elk-Antelope. I think we understand how the reservoir behaves, and when we test it, and then getting reducing the uncertainty on the gas molecules there. And once we understand that, then we're able to put that into our economic model and start doing our project modeling.
How confident are you that it'll all turn out well in 2015 for you?
I'm very confident. There's a lot of activity. We now have, about 3 drill rigs operating up in the PRL-15 area, and another one on standby down in Wahoo, which is closer to Port Moresby. So our main issue now is to complete our extended well test program. I think it's quite important for us to make sure that we're fully compliant with all aspects of the Oil and Gas Act, and one area which I have a lot of, not so much an issue, but just to make sure that we get it right from the get-go is identifying the landowners, making sure that we have the clan vetting process in place so that when we get to first gas, all the issues around ownership, who are the correct landowners, are resolved. So on day one, when the income stream starts to flow through, it's going straight away to the people that are correctly identified as the proper landowners in the project area.
Have you learned any lessons from the first LNG project as to how to go about it?
I'm sure there's a lot of lessons to be learned. They still have issues there, and we're watching what happens there carefully. But things are probably a little bit more simple in the Gulf province in terms of the traditional landowning structure, less populated. I might also add that our project, because it's lower down, closer to the beach, has quite a significant cost benefit. In the current low oil price environment, I think building a project is opportune. And so that when the oil price does rebound again, we come into production, then we can take advantage of a more robust oil price environment. But right now, we're doing the technical work that we need to do. We need to continue to work with state authorities and the regulators, keep everyone well informed of how we're doing the things that we need, because I think the developers can't do this on their own. It also requires government, provincial governments, national government, state agencies to work together. And Papua New Guinea is in a very, very good position because this project is, relative to other international LNG projects, is lower down the cost curve. And so I think we're very competitive. In a $45 oil price environment, I strongly believe this project can proceed. And so I think it's incumbent on all of us to get this project up and running and smoothly in a safe and in a practical manner, because there's a window of opportunity that we can jump through before the other LNG projects get their economics right and follow us.
Developing a project in the Gulf province has its upsides. The costs are lower, given the geographical location of the resources, making it easier and more cost-effective to develop. But the province has its fair share of challenges, unique challenges.
The Gulf province has its special issues. We try to work with them. Once we understand some of the political outcomes there that are still, bubbling away, then we'll move in and work more closely with them. So they need to sort themselves out. I think that's quite important. They do understand that they need to get their political structure. They need to be better at governing their province, because it's, I think in terms of all your socio-economic indicators, malaria, health and all the other types of issues out there, the Gulf province seems to figure quite highly on that. They need a lot of help, but we can be a partner with them to bring not only development but also to help them build infrastructure, schools, roads and hospitals. But we certainly don't want to be the government by default. I think that they need to be with us lockstep all the way.
Coming up, world oil prices and its effects on potential development in the PNG energy sector. That's after the break on Resource PNG. Welcome back to Resource PNG. World oil prices have taken a tumble from record highs of over $90 per barrel in 2014. In the first quarter of 2015, crude oil prices have been trading at an average level of $45 per barrel, much lower than anticipated by many. Will these low prices affect the rate of development for projects undertaken by InterOil? And if so, how drastically will operations be affected? We put these questions to Isikeli Taureka, Senior Vice President of InterOil Corporation. Apart from Elk-Antelope, InterOil finds itself in a fortunate situation, having rights to several petroleum retention licenses within the Papuan Basin.
It's a long-term game, so you make these investment decisions, particularly for InterOil, based on a 30-year project. And over time, I think you can achieve your expectations for your stakeholders, for your shareholders and for the country. So I'm not too, what I'd say, concerned about where the oil price is right now. But there are certainly some dynamics in the LNG market which can change the way contracts may be seen or structured out in the midterm. So we need to keep an eye on that. But we all have to understand that the Asia-Pacific region is quite a dynamic region. They'll require quite a lot of energy, and I think PNG can fill that space in being a supplier of LNG to North Asia and to South Asia as well. We're very close in terms of shipping day sail. We are part of APEC, so I think we're in a very good position to at least pick up off the back of the growth in the Asia region. So back to oil price again. never try and predict it. I think there are bigger forces out there that perhaps understand it. It's it's impacted by geopolitics, also impacted by people who are taking specific arbitrage positions. So at the end of the day, long term, you build a project based on what you think the average long-term price is, and then you go with it. So I'm confident that we've got a project that will move ahead. We're all focused on PRL 15, which is Elk-Antelope, a joint venture between Total, Oil Search, and InterOil. But we've got quite a dominant position in the eastern Papuan Basin. About 16 million acres of exploration acreage, and the PRL 15 side is roughly about 11% of that. We're really excited by some of the things we see there, but it's exploration. You either find it or you don't, but quite a different geologic basin to the one up in Kutubu, Hides and West. So the Eastern Papuan Basin is basically a carbonate play. So if you can imagine, we're drilling for reefs. If you fly from Brisbane to Port Moresby, that's the Great Barrier Reef. Those are the things that we're drilling for, but they're underground, onshore, up in the forelands. So it's quite exciting. It's an emerging basin and very much underexplored. They've drilled perhaps over 300 wells on the Western Papuan Basin, and we've only drilled about 60 wells in the Eastern Papuan Basin. So I'm quite excited about the potential there to find more gas.
Is the outlook good for InterOil? Have other companies shown interest in partnering with you in
I'm sure there are people out there that are as much excited about the basin as we are, but we want to be selective. I think if we are going to partner in our exploration, then I think that's a decision that needs to be made by the board of InterOil itself. But certainly exploration is a game where you want to share the risk. Taking 100% of the risk is probably not ideal. And taking a lower position may not be either. So it's something that a lot of small exploration companies like InterOil always grapple with. What's the right level of working interest you want to hold? That would also make sure that you don't destabilize your financial basis. Yeah.
As in any resource project, InterOil is also on the lookout for partners to develop areas where it holds rights. According to Taureka, InterOil is not rushing into partnerships, but taking a calculated approach and carefully screening its potential partners to ensure maximum benefits are realized for all parties.
I'm sure there are people out there that are as much excited about the basin as we are, but we want to be selective. I think if we are going to partner in our exploration, then I think that's a decision that needs to be made by the board of InterOil itself. But certainly exploration is a game where you want to share the risk. Taking 100% of the risk is probably not ideal. And taking a lower position may not be either. So it's something that a lot of small exploration companies like InterOil always grapple with. What's the right level of working interest you want to hold? That would also make sure that you don't destabilize your financial basis. Yeah.
Given all these developments, what does the future hold for InterOil and more so for the energy sector in Papua New Guinea? We let Isikeli Taureka have the last say.
Well, I think from an exploration perspective, it's quite exciting. In the current oil price environment, probably some brownfield projects of existing producers might go on hold, or maybe it's an opportunity for them to kind of relook at their cost structure and get their cost shape right. I think for the long term, PNG is still a developing, particularly where we are as a developing basin. It's a growing industry, and we haven't really talked about the midstream and downstream side, so sort of adding value on shore, and certainly the government's got some strong views on that. And from an InterOil perspective, we certainly encourage and support the domestic market obligation requirements that the government is seeking. We'll certainly look at opportunities where we can make gas available for midstream and downstream processing, and for gas to electricity. So those are things I think that we need to look at, but there are other people that are better in that space. Our job is to be cost effective in finding gas and then selling it for an economic price to people who want to take advantage and develop that side of the business. So still very exciting. I think we're still very much upstream, but I see generally a metamorphosis of the exploration as we mature into the midstream and downstream processing and adding more value onshore.
Any hindrances?
There's no hindrances really. I think it's really about good policy setting. It's about good fiscal regime to encourage those midstream and downstream companies to come into PNG, because it's quite competitive. The cost of gas that they're looking for needs to be in the area where they can also create value and establish businesses here. So a lot will depend on the sort of policy and the fiscal setting in that particular sector to make it grow. But certainly we haven't seen the end of growth. I think it's a long-term game, and we've got to be investing for the long term. We just can't make those short-term decisions.
Coming up next on Resource PNG, Resource News. That's after the break. Stay with us. Welcome back. It's that time again. Let's take a look at what's been making headlines in PNG's resource sector. National Petroleum Company PNG has entered into a strategic memorandum of understanding with Sojitz Corporation of Japan to further a pre-feasibility study into a methanol project in Papua New Guinea. The MOU signed in Port Moresby this week between both parties follows the completion of a pre-feasibility study into methanol between Sojitz Corporation and the Department of Petroleum and Energy. Under this MOU, NPCP will be working closely with Sojitz Corporation to review and finalize the pre-feasibility study together with development options. Puma Energy has given its support to youth with a mission, confirming a deal to supply MV-YWAM with fuel for the next 3 years. According to Puma Energy PNG General Manager Hulala Tokome, the support to MV-YWAM will enable the vessel to implement its health programs wherever the ship berths in the country. Moving on, an Oil Search Limited has announced its first quarter results for 2015. In an announcement to the stock markets in Port Moresby and Sydney earlier this week, the company has recorded a 16% drop in revenue, largely due to the drop in world oil prices. However, it has also recorded some positive results. Among these, the submission of a PRL license for the Penyang gas field for an extension to the current PNG LNG project, as well as the execution of a sale agreement for the supply of gas to state-owned electricity provider, PNG Power. And that ends Resource News for this week and also brings us to the end of this episode of Resource PNG. If you want to contribute to this program, get in touch with us via email on resourcepng@mtv.com.pg. To view this edition online, you can log on to www.mtv.com.pg, where you will find a link to the Resource PNG page. You can also find us on Facebook. Until the next time, pleasant viewing.